Hello, everybody. Welcome to a live real estate market update for the Reno Sparks area presented by Assist to Sell. And today we're going to talk about and give you a quick overview of the real estate market. Now, this covers the greater Reno Sparks metro area, including North Valley, Stead, Cold Springs, Lemon Valley, Golden Valley, goes out to Spanish Springs, Palomino Valley, south of town, DeMonte, Double Diamond, Pleasant Valley, and so on, Northwest Reno, Somerset, Verdi Mogul, Southwest, etc. So basically the whole metro Reno Sparks area does not cover Carson City, Minden, Gardnerville, Dayton, Fallon, Fernley, and those outlying areas. So before we get started, we're going to be covering more of a, 30,000 foot macro state of our current real estate market. I understand that your situation in every real estate story is a little bit different, and your situation may be different, every marketplace, every price range, etc. So if you're thinking about selling your home, maybe you're thinking about refining with the low interest rates, refinancing, or if you're thinking about buying and you want more specific, detailed value of your property, don't hesitate to reach out. You can DM us here on Facebook. You can reach us at forrenohomes.com, which is our website, and just reach out and let us know you'd like a valuation, include your property address, and we'll happy to get that to you free of charge and give you a much better idea of what your specific home will sell for. So without further ado, let's dive into some of these numbers. And I think the first number most people pay attention to is the median sale price or home price in the Reno Sparks area. And you can see on the screen here, these numbers are through the end of May. Now, real quick disclaimer, this is for the Reno Sparks area, as I mentioned, but this is just single-family residential properties. It doesn't include land and lots, doesn't include condos, multifamily properties, industrial, anything of that nature. It's just single-family residential. So we reached, at the end of May, $399,900, roughly $400,000, which is actually down 3.6% from the previous month, which was $415,000, but still up year over year from this time last year at 2.5%. It was at $390 this time last year. Now, a couple things I want to point out. Number one, if you look at the price, it's been climbing pretty steadily, as most of you, if you've lived in this area for a period of time, you know that the prices have gone up significantly. But you'll see little pullbacks along the way. And the last major pullback we had was actually, and unfortunately this little chart graph here is covering up part of my chart, but it actually peaked out in mid to late 2018 before it dropped pretty significantly down to 365. And it actually corresponds almost exactly with the spike in interest rates. As a matter of fact, interest rates at the end of 2018 were right at the 5% level, which is the highest they'd been in about 10 years. So a spike in interest rates means affordability drops. Affordability being how much it costs to service your mortgage and your debt. So obviously, as interest rates go up, payments go up, people can afford less. It puts a crimp on home prices and tends to drive them down a bit. And as you can see, that's reflected here. Now, as interest rates have dropped, you can see prices have gone up again because, again, payments do drop. Do you want to point out the obvious, and I'm sure you've probably seen and heard if you've been watching the news or reading anything about real estate, is interest rates are near historic levels. You can get a 30-year fixed rate FHA, VA, conventional for roughly 3%, 3.25%. Some are going a little bit even under 3%. So amazing interest rates, super affordable right now, and that's really what's keeping our real estate market healthy and what's driving local real estate. So let's dive first into active inventory. These are homes currently on the market for sale, actually at the end of May, so as of a week and a half, 2 weeks ago. 836 were on the market. That's a change of 9.7, down 9.7 from the previous month, which had 926, and down almost 40%, 38.9% to be precise, from the same time last year at 1,368, so down significantly. I wanted to throw this in instead of just the overall sales. Let's look at price range, and unfortunately this is cut off a little bit, but you can see this is actually up to 300,000. This one over here is up to 400, up to 5, up to 6, 7, and so on. So you can see the sales have been distributed pretty evenly. Obviously more sales in the lower end price ranges. These are considered starter homes, more affordable type of housing. You can see down here a greater number of sales, and of course it drops off a bit as you go to the higher price range. Now let's look at number of closings. Now, this has gone down significantly as well, which does make sense given the current situation of COVID and a lot of the shelter in place, quarantine things we all had to face. It certainly affected all businesses, including real estate. As you can see, we're actually up 2.3% from last month, or April, at 387 closings, but down over 40%, 41.9%, which was 682 about a year ago, so down significantly. Now, what I wanted to point out is the number of sales by price range. So if you look here, again, it's that same chart. This is up to 200, almost no sales, because there's not much you can find in Reno Sparks for under 200 anymore. But this is up to 300, up to 400. This longest, up to 400, is the biggest number of sales, or the biggest price range. Up to 500, 600. But look how it drops off. After you get past that 500 range, it drops significantly. But if you look up at active inventory, you look up here, look at the active inventory we have in the upper price ranges. It's not being reflected in the number of sales. So as has been the case, and I've said this, I sound probably like a broken record if you've tuned into some of these market updates before, and that is Reno Sparks real estate is really a story of price range, and I'm sure that's true for most markets around the country. But if you're in the lower end price ranges, things are getting pushed up much faster, higher multiple offer situations, things like that. As you get above the 450, 500 and above, it's not necessarily the case. So let's talk briefly about absorption rate. Now, what is absorption rate? All this means is how long, in terms of months, it takes for inventory. Whoops, sorry about that. My microphone fell off. It just means the number of months it takes to sell through the inventory that's currently on the market, the active inventory. So for example, let's say we have 1,000 homes currently on the market, and the sales pace, or the average number of sales per month, is 500. That would put our absorption rate at 2, because it's 2 months to sell 1,000 houses at 500 per month. So the absorption rate is really just the number of months it takes to absorb the actual active inventory. So again, a tale of two price ranges, or of price range. If you look here below 600, you can see we're at 2 or less. The reason this is blue here at 6 months is what's considered to be a neutral or stable market, meaning there's equal number of buyers and sellers. And so there's sellers markets, there's neutral markets, and there's buyer markets. Now, when there's a seller market, if you're not sure what that means, seller market just means that sellers have a little bit of pricing power in that they have a product in their house, and there's a lot of buyers that are looking for houses, and there's not a lot for sale. Therefore, they can probably get higher prices and may drive prices higher. The opposite is true in a buyer's market. If there are a whole lot of houses on the market but very few buyers, well then obviously buyers have a little bit more pricing and negotiating position in that they can offer lower prices, and they can generally get and push the prices of properties down. So 6 is kind of that neutral zone where there's about equal number of buyers and sellers. You don't see prices really climb all that much. You don't see them drop much either. So as you can see, the 6-month mark here, when you start getting above 600,000, look what happens, the absorption rate. I mean, you're really neutral or entering into a buyer's market. But again, if you're below that 600 range, and if you get below 500 even, it's even less. I mean, it's less than 2. But overall, you can see the absorption rate is down 11.8%. It was 2.4 before, and it's actually up 5.1%. So what we're seeing is a lot of people staying put, given the COVID issues, but also lower interest rates. You're seeing people refinancing, which means there's not a lot of inventory hitting the market. But then as interest rates drop, you have more people entering the marketplace. They want a place to live, and so on. So if you're looking at selling, in conclusion, if you're looking at selling your property, it's certainly a very good time to sell your property, in that interest rates are low, there's a lot of demand out there, and especially if you're into that 500, 450 and less range, the chance of you selling are extremely good. You can probably get a good price for your property right now. And however, if you start to get above 500, 550 and up, that may not be the case. I mean, certainly your home will probably sell, but you may have to get a little bit more competitive and aggressive on pricing. But as I mentioned when we started this, if you have concerns, or if you want a more specific or accurate market value of your property, don't hesitate to reach out. DM us, hit us up on forrenohomes.com. You can check out our website there and get in touch with us, and we'd be happy, free of charge, to provide you with a full detailed analysis of your property and give you a more specific price for your property. In any event, regardless of your real estate challenges, we wish you the best of luck. Stay healthy, stay safe. Look forward to hearing from all of you soon. Have a great evening. Thank you.